And it's oil's crude moves not hurting business in the oil patch. We'll talk to the chairman and CEO of Crestwood Equity Partners about why he sees nothing but green in 2019 when it comes to black gold. Up next, a sea of colors maybe in the oil patch. Oil plunging again after yesterday's 9% rally, but one company isn't seeing red, only green. The chairman and CEO of Crestwood Equity Partners here to tell us why he's so bullish on black gold. Countdown is coming right back. Volatility continues. I just want to point out the fact that we have been here on set for 15 minutes and you have seen massive swings just within the afternoon. It's pretty much less than an hour ago. You saw, you're seeing on your screen right now, the Dow hit a low of 611. So we've come off of those lows, but it seems this movement seems to happen literally within the last hour, hour and a half of trading. Today, no different. But we want to talk about oil now because that is moving the energy sector. If oil is a bellwether of future economic growth, then prices are painting a pretty grim picture. And you can see on your screen right now, again, below $46 US a barrel. U.S. crude prices, though, have slumped 41% since hitting a 4-year high in October. It was $76, I think it was. Yes, we're seeing that on your screen right now. And then while crude is down, midstream oil company Crestwood Equity Partners is up 11% over the past year, which is why we need to go to our guest, who is the CEO and chairman of Crestwood, Bob Phillips. Bob, thank you so much for joining us today.
Thanks, Christina. Good afternoon.
Yeah, good afternoon. I want to get straight into energy, oil, but let's start with oil. The fact that you saw that high in October, $76. You're seeing this low right now, fears of a slowdown across the globe, and all of these people concerned that, well, traders, I shouldn't say people, these are the people I'm speaking to, saying that, you know, I don't know where it can go from here. So are you bullish on oil right now?
Well, we are. We're bullish on the entire industry, Christina. Yes, oil has dropped considerably in the last few months. It's been a roller coaster ride for traders of commodities as well as energy investors, and certainly the industry has not turned out as well as we thought from the beginning of the year. The good news is the market fundamentals for the U.S. oil and gas industry are actually quite good right now, particularly when compared to the last downturn back in 2015. And when we look across the industry, oil, gas, and gas liquids, we see continuing growth in supplies. We see continuing build-out in pipeline infrastructure. We see improving netbacks for the producers. Their economics are getting better. Growing markets, and in the Permian Basin, which is the bellwether for our industry, we're continuing to see growth in supply and drilling activity despite a decline in prices. So actually the fundamentals are very supportive and very constructive for what we think is going to be a great 2019.
So you've essentially listed a lot of efficiencies with these companies. What do you think the new break-even point is? Is it well below? Can these companies handle anything well below $40?
They can, and it's across a number of different shale plays. I think that's the good news. Technical improvement continues to happen in the drilling and completion side of the business. Recent reports have indicated that we've got break-evens as low as $10 a barrel in the Delaware Basin, $17 a barrel in the Midland, and $24 a barrel in the Bakken. And so despite a $45 crude price, we're seeing improvements in break-even prices and improvement in netbacks, so producers are actually making pretty good money at these prices.
Given your field right now and the fact that your company is in correct me if I'm wrong, transporting the liquid natural gas, what can you say to the infrastructure in the United States and what needs to be improved to make your life and your business a lot easier?
Well, the good news for investors is the midstream infrastructure thesis, which has really carried the industry for the past 4 or 5 years, is still very much intact. The industry continues to spend a significant amount of capital to build out pipelines, plants, storage facilities, and export facilities to essentially handle this record supply, oil, gas, and gas liquids. The good news for the midstream industry is we're in a lot better shape than we were during the last downturn. Balance sheets are in better shape. Companies have simplified their structures. Leverage ratios are down significantly. Coverage ratios are up. Distributions for the MLPs are very stable. And excess cash flow is now being reinvested into new projects, which, as you know, creates a better all-in return on investment than what we've experienced in the past. So I'm quite optimistic that 2019 will be a year of great earnings and great return for investors.
You sound very, very optimistic, but I think I'm still trying to understand, where is all this supply going, given the massive production that's coming out of the United States? And let's bring it back to oil, just to make it a little bit more general at the moment. Do you see this production, domestic production, climbing higher despite the cuts abroad? Where is it going to go?
Well, the oil export markets are incredibly important to U.S. domestic supply. While we've got good, stable refinery markets here in the U.S., our petrochemical markets are growing, particularly the export side of the equation. But the oil export market today, about 3.3 million barrels a day, but increasing to 5 to 6 million barrels a day. And midstream is building out that infrastructure along the Texas and Louisiana Gulf Coast. So oil exports are going to be an important part of balancing the market for our U.S. producers. The good news is we have very low break-evens here for both oil and gas, so our production is going to be quite competitive in the global markets. Take gas as an example, with natural gas landing at LNG facilities at around $4 an MMBTU. You're selling it in Asia at $10 an MMBTU, or in Europe at $8 an MMBTU. So the good news is not only are we very low on the cost curve, but we're in a great position in the U.S. to be able to export production to other markets and be one of the low-cost service providers in the industry.
If you could just sum it up in 20 seconds or so, you have a pipeline going from Russia to Germany by 2019. Won't that affect U.S. exports?
Well, it will to a certain extent. Europe is always, of course, short oil, and that oil and gas, and that will be an important additional source for oil. I think politics will play a large part in how that market gets differentiated. But the good news is the American oil and LNG industry are in great position to be able to compete for that market in Europe. And I think we're going to have a very competitive product and a very competitive process as we go into 2019 and 2020.
Thank you very much, Bob, for all of your insight today.
Thanks, Christina.